Yeah, my name is Sylvain Goupille, and I'm founding partner and manager of Octobre, Liquidity Guarantee Facility. Yeah, in my life, I've structured and raised many impact funds. And the usual issue that I was facing with new investors was liquidity. Many investors were saying, okay, we like your fund, we like the theory of change, we like the crew, we like the team, we like the track record, the risk management. But you know what, your fund is not liquid and we can only invest into liquid strategies, so thank you, goodbye. And so really, for me, the key was to try to break this deadlock and trying to find solution to make investment into illiquid strategies as liquid as listed equities or listed bonds. Yes, liquidity is basically your ability to get in and to get out of your investment. So typically when you're investing into listed equities or listed debt, you can exit your investment within a few days or few hours, depending on the size and the liquidity of the underlying. When you're investing into passion capital vehicles, impact funds, 8 years, 10 years, you are locked for 8 years or 10 years. And therefore it's a different kind of risk. And therefore the expected return for a closed-ended fund is much higher. So the curse of impact investing, or one of the curses of impact investing, is that you want to have access to passion capital because what you're doing on the ground need passion capital. But on the other hand, because you're illiquid, because you're passionate, your expected return is much higher than a liquid strategy. Yes, when you think about who can today invest, well, where's the money going when talking about the global asset under management? 90% of global AUM are going into liquid strategies, so listed bonds, listed equities. And the remainder is going to real estate, a little bit of private equity, and a very tiny portion into impact funds. The idea is that if you can make this investment into impact fund as liquid as listed equities or listed debt, suddenly you can increase by 10-fold or 100-fold the amount of capital that can flow into impact. And so you can mobilize much more capital. There is quite an easy solution. And the solution is what the market has experienced in 2008 with the Lehman crisis. When the world was short liquidity, there is no more liquidity between the banks and the insurance companies, then the central banks stepped in. And they say, you know what, we as central bank don't have any time limitation, so give us your asset. We take it for 50 cents, 80 cents on the dollar, whatever, and we can give it back to you or whatever. So having a central bank for impact is a great idea because suddenly you can be this buyer of last resort and provide liquidity to the market. So what we have done with Octobre is that we have borrowed some of the balance sheet of sovereign government, and namely the European Commission. And with this long-term passion and sovereign capital, we're able to provide guarantees to investors and allow them to exit at any time from their investments. The guarantee, the liquidity guarantee, is a product that we are selling. So the client, the investor, has to pay a small yearly premium, like any insurance, if you wish. The agreement that we have with our funder, and namely with the European Commission, is to have basically a very low-cost guarantee. So we're accessing concessional capital from the European Commission, and because of this very low-cost concessional capital, we can offer a very low-cost liquidity guarantee. And so basically, it's very affordable and super strong guarantee to the market. It does. So basically, when a client who is an investor is taking a guarantee with us, we guarantee him that he can exit of its investment within 10 business days. And so it makes this illiquid investment as liquid as listed equities or listed bonds. And so therefore, he has a liquid risk with an illiquid asset. And so he can put more money into passion capital, impactful capital. That's the expectation. So it could have some very positive impact on the market. So because the asset or the impact fund is now liquid, the expected return from the investors will be lower. And so it's breaking the curve that I was mentioning earlier. It means that now impact funds can offer lower return than before, or align with the liquid asset, basically return, market rate return. So when an investor uses the guarantee, so we buy its position within less than 10 business days, so it's very quick. Then we hold the participation, the stake on our balance sheet, and then we have 12 months to sell it back on the market, on the secondary market. And that's very easy. And so we have time to do it. If we cannot find a buyer within 12 months, we will hold the asset on our balance sheet for 18 months, 24 months, whatever time it takes to exit the position. Yes, and and that's the beauty of having the European Commission as part of the capital. So we have significant resources. We have an underwriting capacity of about $500 million to start with, to show that it's working pretty well. And that's basically, permanent capital forever. Yeah, knowing the value of the asset that we buy back is a very good question. It's not an easy one, and especially because today, when you look at closed-ended fund, because people are not looking at any exit in a short term, but only at maturity, usually the valuation of these impact funds or private equity funds are so-so, to make it simple. So what we are doing because we're providing the guarantee, we are investing like a shadow investor. So we are making a due diligence on the fund, like if you were to invest into it. We're looking at the theory of change, the team, the track record. We're looking at the valuation guidelines of this fund. We're making sure that the valuation of these assets are basically the best in class. And we will monitoring, as an investor, the value of this asset every quarter or every month, so that there is no surprise and no asymmetry of information. Yeah, secondary market in emerging market is a very good, it's a market failure. If you look at secondary market for private equity and private debt funds in Europe or in the US, it's very efficient. And the growth of the secondary market is about twice as fast as the primary market. And because of this very strong activity, the spread between the NAV and the market price of the secondary trades is a few percent, 5 to 10%. It's very narrow. When you move into emerging markets, and because there is a very lack of supply and demand, the spread is very high. So the intention and the mission of Octobre is also to be an active player on the secondary market, to make sure that basically this spread is narrowing and that it's become much more efficient to invest into secondary market for impact. Yeah, for us, Octobre is a way to mobilize private capital for impact at very large scale. We have a structure which is highly scalable, highly replicable, and the ambition is to mobilize about 25 billion euros of new capital for impact within the next 5 years. So it's quite ambitious. We are obviously a financial instrument, a financial tool, but it's really a way to increase significantly the amount of private capital for impact. And that's our impact.